So up first, we are joined by Brandon Munro, the co-chair of the World Nuclear Association Nuclear Fuel Demand Group and managing director and CEO of Bannerman Energy. Today, Brandon will be providing an overview of the uranium market and will discuss the recent aggressive buying of physical uranium by SPUT. He will also provide an outlook on the sector, followed by an update on Bannerman Energy. Good morning, Brandon.
Hi, Jane. Well, what a good time to be talking uranium at the moment. So thanks very much for having us, and thanks very much for putting this on for investors. I think there's a lot of value that we're going to share in the next few minutes.
Absolutely. I'll let you kick off with it.
Great. Okay. So what we're going to do today is I'd like to talk predominantly to the uranium sector, but obviously we can include the relevance of Bannerman Energy within that. And we're entering a period here where it's really a momentum period for investors. But what's so important to understand is it is backed by very solid and appealing, in fact, compelling fundamentals. So what I'd like, of course, is to recommend that investors go to our website and have a very careful read of these disclaimers. And before I talk about the market, let me just tell you a little bit about Bannerman Energy. That share price graph is the graph of a company that's been in a long, protracted, difficult bear market and is now enjoying a sector that is starting to turn. And we've obviously done very well there, but we have outperformed almost the entirety of the uranium sector since last November when equity started to re-rate. And I'm hoping to share with you a few of the reasons why that's been the case. We've got a very strong capital structure. At 30 June, we had $12 million in cash. We don't carry any debt. And I'm really proud to be working with the board that we have. A very talented board, very experienced, and has key deep expertise in the places that we really need it. That's uranium, that's Namibia, and that's financing. Bannerman Energy has been focused on our Etango uranium project in Namibia since 2005. You can see where it is on the map there. We're amongst the big players, including one of our colleagues on the call today. And what we've got there at Etango is a globally significant resource endowment. And we'll talk to that. A really important attribute of our project is its low technical risk. It's highly conventional. It's truck and shovel. It's open pit. It's heap leaching. We've de-risked it over several years of operating a pilot plant. And as you can see, we're close to all of the infrastructure that we need. You cannot underestimate the importance of operating in Namibia, and in particular, the fact that Namibia's got a 45-year history in exporting uranium and has all of the associated bilateral, governmental, regulatory, and physical infrastructure required to continue exporting this sensitive and complex product. And finally, over those years, we've established a very strong in-country presence. We've got big hitting senior executives in country. I know the country well. I lived there for more than 5 years and I really understand how it operates. And that enables us to both make the best contribution to that jurisdiction, but also ensure that we can make the most of the very strong attributes that Namibia has to offer to a uranium developer. And as I'll talk a little bit later, what we've now introduced into our project is scalability via the Etango-8 development pathway. But let's talk about that once I've talked about the very strong uranium sector fundamentals. As Jane said, we're here to talk about the big news in the sector, which is a SPUT Physical Uranium Trust and what that's now doing for fundamentals. So a quick catch up for anyone who hasn't followed the story. SPUT Asset Management, they're a resources giant out of Canada. Until now, they had 4 bullion trusts that had a total value of circa 13 billion across 250,000 investors. Now, importantly, as principal and as a fund manager, they've got extensive uranium equities holdings, which no doubt has brought their interest into the physical vehicle. And now we're a couple of months into the launch of what I'm going to call SPUT for brevity. So SPUT, it's TSX listed. Very importantly, it's both Canadian denominated units and US dollar denominated units. So their friends across the border are able to invest pretty seamlessly into this vehicle. Everyone in the uranium world needs to understand one thing. There are no redemptions. This is not an ETF that's going to be great on the way up and devastating on the way down. It's built into the trust document. They do not redeem. They will simply buy and hold. And even projecting forward, when we start to see a cycle soften, and we expect that's a long time from now, but when it does eventually happen, they will simply continue to operate as an investment vehicle that offers exposure, good or bad, to the uranium price. This is long-term sequestration. Now, where the action has really started is when SPUT launched their at-the-market facility about 4 or 5 weeks ago. And I'll show you the impact with that. Initially, they gave themselves 300 million worth of headroom under their shelf prospectus, but they got through that so quickly that they've bumped it up to 1.3 billion, and they've still got circa 800 or 900 million of that to go through. And then they just do it all over again. They can just simply amend the existing shelf prospectus to increase their headroom even further. This is a vehicle that's in perpetual motion at the moment. But wait, there's more. They're planning on listing in the US on New York Stock Exchange, which will open them up into greater liquidity and an even broader range of investors, including some retail and nano retail investors that have shown an interest in this sector. That's planned for next year, something that we don't need to focus on now, but we've got to look forward to. So what's happened? So here's the 5-year spot price, spot uranium, and I've indicated on that when the announcement of SPUT was made. Then, as I say, the action started when their at-the-market facility started working. What that means is every single day, if they're trading at a premium, and if the company's happy to do so, the trust is happy to do so, they can instruct their at-the-market underwriters to basically issue new shares. In other words, they will sell shares to buyers on the market and then quickly issue those and remit those funds to the company. So it means that they can be issuing units and buying uranium on a daily basis. And that is the effect that it's had in a very short period on the uranium spot price. It's pushed it up to about $50. It's finding a base there at the moment as we speak, but that's nothing short of dramatic. And in fact, rather than relying on hyperbole, I'll let you know that it is the single most rapid increase in the uranium spot price ever since spot price has been reported and recorded. So we are entering some very, very interesting times. Now, this is what they've been doing. So in the green bars, that is their daily spot market purchases of U3O8 since they launched the ATM facility. And then that golden line there is their slow accumulation, or rather rapid accumulation, of total uranium. They're now up to about 28 million pounds of uranium that they've sequestered, including what they bought from UPC, Uranium Participation Corp. And that might not mean a lot to you until I show you this. Until SPUT launched, that was the average total market spot liquidity in this sector, about 220,000 pounds per day. So as you can see, even on a lazy day, SPUT is almost achieving the total market liquidity before they came into this sector. So that's what's putting the upward pressure on the spot price. Even over the last few days, when we've seen quite a softening in equities and a softening in a commodity interest with what's happening in China, they're still playing the market. They've still bought another 200,000 pounds overnight. So they are having a big impact. Let's project forward just for fun and see what that could really mean. This is what I've called the uranium virtuous cycle. You see, what happens is we've got a virtuous cycle that's operating here in favor of SPUT raising more money through issuing more units, through buying more uranium. So what do we mean? Well, they use the at-the-market facility to raise more units and raise more capital. They buy uranium with that. That demand, as you saw from that slide, has created price growth. That's fueling sentiment growth across the board. That ensures that SPUT operates at a net asset value premium, which is the main precondition for them to then raise more money through an at-the-market facility. And so the cycle continues. And we've seen this cycle spinning on a daily basis because of the flexibility and the rapid fire nature of their at the market facility combined with their capacity to buy pounds in the spot market almost every day. Now, where this cycle starts to spin even faster is when you look at other market players. So of course, they're not the only player buying uranium. Producers are buying. We heard Cameco over the last week talking about that. Traders, of course, are buying, and we've just started to see utilities start to come into the spot market to buy their own material. All of that buying continues to price growth, contributes to price growth, contributes to sentiment, and so the cycle spins. Now, that sentiment growth, apart from fueling equities, is also fueling ETFs. And the two big ones, URA and URNM, have just crossed $2 billion in assets under management combined. Here's the rub. They own SPUT. So SPUT, for example, in URNM is 8.5% of their index. So every time that sentiment spins in their direction, they need to buy more units, which then spins the SPUT virtuous cycle. And whilst URA don't have SPUT because of a timing mismatch, by the time they do their next rebalancing, they will need to introduce SPUT. And so that will present an interesting trading opportunity that's going to give this cycle a serious amount of G-force for a period of time. Now, that means robot buying. As they raise money, that just comes into SPUT, spins that net asset value premium, and away we go. And of course, it's not only SPUT who's out there raising money. There's Yellowcake, there's Uranium Royalty Corp that's been buying physical uranium in the last couple of weeks. There's juniors who've got that capacity, hedge funds. And don't be surprised if amongst all of this, we see another vehicle opening up. That is what is getting investors very excited. That is what is creating a durability and a longevity to this current very significant price growth. And that's part of the reason why I'm so excited, and no doubt you're on this call. Now, what does that actually mean looking forward? So I've just put a few numbers there in terms of weekly average purchases. And if you accept the proposition that this is going to continue into the medium term, I've annualized those and represented current buying as a proportion of all of the uranium mined around the world. And that's where we're at the moment. We're running 2 million pounds. Now, if all of the uranium that was mined around the world was sold into the spot market, this vehicle would, on an annualized basis, be sucking up 80%. But here's the thing. Most of the uranium that's mined around the world is being delivered into existing contractual commitments. So this starts to open your eyes to the potential scale of the disruption that this vehicle could have on this sector. And as that disruption potential gets better understood, it's not going to scare investors away. It's going to spin that uranium virtuous circle even faster. Now, what are some of the market effects? So look, the most important one is by the end of the year, we're going to know definitively if there is so-called mobile inventory around to hold up the party. So there are some market commentators who've been keen to remind everyone that there is inventory in this sector, and they claim that a lot of it is mobile. Well, let me tell you, ladies and gentlemen, if that mobile inventory doesn't come out at $50 a pound, it doesn't exist. So we will know just how much mobile inventory there is or perhaps isn't in this sector. What it's already done is remove the carry trade. If you don't understand what that means, then you might need to follow me on Twitter or catch some of my YouTube commentary, because we don't have time for that now. And most importantly, what this has done is it has created a shift in utility sentiment from complacent to concern. Now, what's really important to understand is that against that, we've seen some interesting demand developments. So first of all, a number of US reactors have just in the last couple of weeks been saved from early premature closure. So what was going to be defueled just last week is now creating an immediate demand requirement so that those reactors can continue operating next year and beyond. And because of government support in the US, those utilities, both in regulated and unregulated markets, are somewhat mitigated against price increases. This isn't a gas type situation where the cost of the gas represents 75% of the cost of the electricity. The cost of U3O8 in a nuclear power plant comprises 5 to 10% typically of the cost of the ultimate electricity. And now, because of these government measures, that equation is even further mitigated because of some assistance that's being offered to operators in the US to represent their clean emissions credentials. Now, in terms of the supply response, you might be asking yourself, well, when might this party come to an end? And what I'd like you to understand is that there are no substantive supply responses on the horizon before 2023 at the earliest. Cameco has confirmed that they're 18 to 24 months away from the even earliest potential restart of McArthur River. Kazatomprom have committed to the London Stock Exchange that they will hold their current production steady until the end of 2023. And the other major mines that are on care and maintenance that have got the potential to come back on quickly, they're still, in my opinion, a couple of years away. So what that means is this can continue unabated by increased supply. And in fact, as utilities start restocking, there will be more of a competitive demand type of dynamic rather than a supply suppressant dynamic. Now, this is some momentum that I've talked to in a previous broker briefing presentation. So rather than go over it again, please look that up. It's really worth your time, and it'll give you a feel for how this current momentum is backed by solid, large scale, really impressive market shifting fundamentals. So finally, uranium fundamentals. What does history tell us about all of this? I liken where we're at with decarbonisation, not to the last uranium boom, which was a spike that got cut short by the GFC, but rather to the uranium boom that we had back in the oil crisis. And the reason is that, like the oil crisis, decarbonisation is affecting, adjusting, and disrupting every aspect of energy and all of the interconnections with the world's largest economies that come with that. Last time that happened was the oil crisis. And for all of nuclear's superior energy production attributes, we can now add emissions free. So that is, I think, a very instructive history lesson as to where we could find ourselves as this cycle really picks up momentum over the next decade. And in case you think you've missed the boat, that's really what the last little uptick represents on that graph. And with the recent pullback in equities, I'd invite investors to use the opportunity to really have a close look across the sector, but in particular at Bannerman Energy, which of course is what I'd like to talk to now. Now, why are we outperforming most of the sector at the moment in terms of share price growth? So first of all, it's our sheer scale. Secondly, it's our extraordinary leverage to price. And thirdly, it's the fact that leadership has a track record of delivering, and we have ensured that non-financial risks have been pruned off this investment. So in terms of our scale, we've got a resource base of 208 million pounds, and within that, the Etango-8 project has a ore reserve of 60 million pounds. I'll tell you what that means in a moment. Here's an example of our NPV sensitivity. We start to offer extraordinary cash production as we move beyond our assumed price of $65 into whatever uranium price scenario you'd like to consider. And this is not an investment where you need to look over your shoulder in case you get hit from behind. We've been very good stewards of capital. We're in a very stable jurisdiction. The project has low technical risk and is advanced. And very importantly, we have our environmental permitting and very broad community support. Now, here's what I particularly notice from the feedback we get from investors. Investors like the fact that they can invest according to whatever their uranium price scenario is, knowing that as this cycle starts to mature, that uranium price scenario finds its way into our bank account because we can produce in the upswing in this scenario. We've got that production capability. We've got robust economics at significant scale. There's only a handful of projects around that can match £3.5 million per annum. And that leverage is enhanced by our capacity to expand production, potentially up to £7.2 million, which is a larger scale project that we've already completed to a definitive feasibility study level. Again, you can find all of this on previous broker briefing presentations, but here are our PFS outcomes from the PFS on Etango-8 that we very recently published last month. And finally, just to illustrate the scale-up expansion and the life extension potential that we've got at this project that further enhances our leverage. The left-hand graphic there is the pit design from Etango-8 at completion of initial 15-year mine life. That's at £3.5 million, through to the right-hand side, which is the final pit design after 15 years at £7.2 million for the DFS version of our project. You can see that we're simply operating within a already designed series of pit shells. So expansion is very simple with this project. That's our pathway to production in 2025. And that is where you can knock yourself out with technical information. We've published 113 pages of our PFS on our website and got a comprehensive presentation dealing through all of that as well. So look, in summary, talking about Bannerman in the context of this exciting phase in the uranium sector, we are globally significant with a £3.5 million per annum output, but with further expansion capacity. Our economics are robust, and we've now, with the Etango-8, got low hurdles to development. Crucially, we have our environmental approvals in place, and we've got strong community and government support. Love to be in Namibia, and there is no better uranium development jurisdiction, in my opinion, particularly when you take into account its history and its excellent infrastructure. Our project is low technical risk, and we've done a DFS already on this project at a larger scale, and we've operated a demonstration pilot plant for years. And finally, because of the new approach to this project through Etango-8, we have a streamlined pathway to development that will meet sector deficits. And once we are able to get into production, we can then expand to meet widening deficits as this decade moves forward. So love to hear from you. Best to follow me on Twitter, but of course you can find us at our website, and you can also access some previous presentations on the uranium market and Bannerman Energy that I've had the pleasure to do with Broker Briefing. So Jane, thank you very much, and back to you.
Thank you for that, Brandon. As always, it's great to have you on. We've got a couple of questions, so I'll jump into them quickly. So how does the current uranium price change the financials of the Etango project?
Well, we've done our PFS on Etango-8 at $65. And whilst we aren't there yet, the spot price is around 50. Bear in mind that when the contracting cycle does start, historically it's averaged about a 20% premium to the existing spot price. So we are starting to come into the range where we would get interested in the current uranium prices. It doesn't change our project, it just makes it an awful lot more attractive. What it changes from an investor's point of view is, first of all, there's the upside leverage, but secondly, for a long time, $65 didn't look too great compared to a spot price that was trading at $30. So I think what it's done for us crucially is I'm not getting the question anymore about, gee, is $65 reasonable? Is $65 realistic? The investment community now finally understands that not only is that realistic, but they're positioning themselves for an overshoot, hence why they're looking to us for scale and leverage.
Thanks, Brandon. And just quickly, so what should shareholders look forward to over the coming months?
Well, we're in the midst of our DFS on Etango-8. That's a fairly short definitive feasibility study because we've been there before. We've done a DFS on a larger scale project. We would have that completed by this time next year. And so because of that, that's the main focus within the company. And we are tending to trade really as a as an option on uranium. So I think the most exciting thing to follow is the uranium sector itself. As I say, knowing that we're a well-pruned option on uranium and we won't be taken from behind with any external company risks.
Wonderful. Well, Brandon, as always, thank you for coming on to Broker Briefing, and a copy of today's recording will be available online in the coming days. Thanks again.
Thanks, Jane.